Bitcoin has officially blasted past $122,000, a level no one thought we'd touch this soon. But here's the real story. It's not just retail traders pushing us higher. In fact, there's a tidal wave of institutional money quietly flooding in through Bitcoin ETFs, and today's developments could determine whether this rally becomes historic or hits a wall. Welcome back to Crypto Bulletin, your daily source for sharp, professional, and market-moving crypto updates. I'm your name, and today we're diving deep into the biggest catalyst driving Bitcoin's explosive surge, one that could change the landscape of crypto investing for years to come. Let's start with the raw numbers, because they are staggering. In just the past week, U.S. spot Bitcoin ETFs saw $253 million in net inflows. That's not traders chasing a pump, that's long-term money locking in positions. Ethereum ETFs weren't left behind either, raking in $326 million in the same period. Meanwhile, Hong Kong's Bitcoin ETFs? Nothing. Zero inflows. A total standstill, highlighting just how dominant the U.S. market is in setting the tone for global crypto momentum. And leading the charge? BlackRock's IBIT ETF, which alone secured $189 million in net inflows last week. That's almost 75% of the total Bitcoin ETF inflow being driven by a single fund. These are not casual moves. These are strategic capital allocations. This is why Bitcoin isn't just hovering above $122,000. It's been climbing with conviction, gaining over 3.3% in just days, and inching dangerously close to retesting its all-time high. Asterisk. And if you thought ETFs were still a playground for retail traders, think again. Harvard, yes, Harvard Management Company, which oversees one of the largest university endowments in the world, has disclosed a $116 million position in BlackRock's iShares Bitcoin Trust. This isn't just about returns. This is a signal that the most conservative, risk-averse institutions on the planet are now seeing Bitcoin as a viable, strategic asset. It's a trend that's quietly reshaping the market's DNA. What we're witnessing is the early stages of deep, institutional integration into crypto, a shift that could add decades of stability and trillions in liquidity to the space. Now, add politics into the mix. Last week, President Trump signed an executive order allowing for 1K retirement plans to include crypto assets, Bitcoin, Ethereum, and others. This opens the door for potentially trillions of dollars in retirement savings to flow into digital assets. The reaction was instant. Bitcoin jumped nearly 2% on the news, and major ETFs like IBIT followed suit. For years, analysts said, it's not a matter of if, but when institutions and retirement funds start holding Bitcoin. Well, that just happened. Between ETF inflows, heavyweight investors like Harvard, and now favorable policy shifts, it's no wonder many experts say breaking $122,000 was inevitable. Asterisk. Investor mood? Overwhelmingly bullish. The Crypto Fear and Greed Index is holding between 60 and 70, deep in the greed zone. Historically, this means buyers are confident and dips are getting bought up quickly. But let's not get too comfortable. Analysts are warning of a growing risk: corporations leveraging debt to buy Bitcoin. If prices keep climbing, these moves look genius. But if Bitcoin faces a sharp correction, the fallout could ripple through both crypto and traditional finance. It's a high-stakes game, and not everyone will play it well. Asterisk. So, where do we go from here? ETF inflows are still hot, but the market's eyes are now turning toward next week's CPI and PPI reports. Any sign of inflation heating up could shift Federal Reserve policy, and that could either supercharge this rally or slam on the brakes. Plus, will other Ivy League endowments follow Harvard's lead? And if they do, how high could Bitcoin go? We're entering uncharted territory, and the next few weeks could define the rest of the year. That's it for today's Crypto Bulletin. If you found this breakdown valuable, smash that like button, subscribe, and hit the bell so you never miss an update.